It's less than 2 weeks right now until Christmas. Our next guest runs the Buy Now, Pay Later platform Klarna, and he's seeing holiday shopping up 26% from last year. Joining us right now to talk about the consumer, Sebastian Siemiatkowski. He is the CEO of Klarna. Good morning to you. So things are up in a big way. Can you segment it for us so we can try to understand where the growth is coming from, and also maybe if there's any slowdown, where that's happening?
Yeah, I think that the one thing that is misunderstood in general is people look a lot at the revenue, like the general sales number in dollars. But what people are missing is that due to inflation, the number of products, items sold is actually many times smaller. And so if you talk to a lot of the retailers that we speak to and so forth, their concern is, yes, the dollar value is the same, but due to inflation, the number of items shipped is less.
Have the kinds of products and the price point of the products shifted for you? Meaning the Buy Now, Pay Later sort of model was originated with higher priced items, but it feels like it's coming down in terms of price for that. And I wonder whether that's a good thing or a bad thing for the economy writ large.
It's a good question. I think, we saw that we estimate the Buy Now, Pay Later grew about 24% this year over last year in the Christmas sales. And I saw recently that some of the credit card companies posted maybe 2% or 10% growth at most. So what you're seeing is a clear shift away from credit cards, which makes a lot of sense. I think it's kind of, I think it was very interesting. President Trump announced that one regulation he was actually for was interest rate cap at credit cards. I mean, we have $1.3 trillion of credit card debt in this country. And Klarna, with our services, have saved consumers over $2 billion in interest rate by interest-free payments. So this is an area where there's tremendous opportunity.
Well, interest-free if you pay on time.
Correct.
Right. It's very expensive if you don't.
Well, that's not entirely true. I would say our late fees and so forth are on par with others. But again, if you compare it to a credit card, this is actually real savings, right? It's $2 billion. So for us as a company, we even wanted to say, President Trump announced that he was going to invite acceleration of permits and licenses for anyone willing to invest $1 billion. Where we are willing to invest $1 billion in the U.S. and take on the big banks if we can get faster acceleration of our bank license.
So what do you say? You want to be a bank? You want a bank license?
We are a bank in Europe. We want to get a bank license in the U.S. We want to accelerate our money transmitting licenses, and we're willing to commit $1 billion to do that, to go after these horrendous credit card fees that American consumers are paying.
We keep actually talking about the credit card sort of ecosystem and the future of it. Actually, in the context oftentimes is about crypto. We talk about sort of how that, and stable coins and how it may bring down the prices of these fees. How do you think about that, and where do you play in that?
So we've looked at crypto. I mean, I think so far it's an interesting asset class that a lot of people have been interested in. It hasn't yet proven to be a more efficient way of transferring money per se between two different. It's slow. It's not necessarily fast. There's improvements to it yet, and we're very open, and we are right now investigating if there's better opportunities to use it. We're seeing more and more people.
But long term, would you I hate to ask it. It's sort of like asking the big competitor. Would you short the big credit card players, because of the margin they've been able to capture all these years? And does that margin disappear?
It will definitely disappear. The future with AI and everything is we're going to have digital financial assistants, agents that can go and negotiate on your behalf with banks. Today, this is a excess profit market. It's not a well-functioning market because we are too lazy as consumers to switch between banks. We're stuck with them. So if we can get AI agents to help us switch, what's going to happen is you're going to wake up in the morning and your computer will say, hey, I managed to get you a much better interest rate. The only thing you need to do is say yes. So of course you will switch.
How should the investor class and how should even the consumer class think about you and, for example, a firm?
I think that what we are is a part of that change to retail banking. There's going to be a tremendous pressure on the excess profits that banks have shown. I think it's a $200 billion of interest rate that consumers pay on annual in the U.S. It's tremendous amounts of money that they are losing out on this.
But do you feel there's more competition coming into your space, Apple and others?
There is, but it's a good thing. Look, I'm coming from Europe, where interchange is regulated, where credit card and debit fees transactions cost 20, 40 basis points. A $100 charge on a credit card in the U.S. generates 550 basis points of fees, both on the merchant fees and on the consumer side by revolving. That's a tremendous amount of money, which hasn't had enough competition, and it's going to come down.
Long term, do you expect people to use the Buy Now, Pay Later for everyday items? Is that happening? And this goes back to, is that a good thing or not?
Well, I think, look, when I was a kid, I used to work at Burger King.
Yeah.
And when people swiped the card, Burger King was the same in the U.S. You used to press 1 for debit, 2 for credit.
Right.
The banks removed that because, as a consequence, we didn't put all of our spending we took only a part of our spending, and then we were less likely to revolve, and they made less money in interest. So what we are doing is bringing that back. Every time you press the Klarna button, there's a one pay now, which is the full amount. Actually, 30% of our payments volume is pay the full amount, debit, and then 70% is credit. And so giving people that option back gives them control over their spending. And then for the credit side, you only do fixed installments, you take zero interest, and you ask people to, because revolving is a bad concept. It's bad for consumers.
We had Max Levchin from Affirm on recently, and he talked about how he's not seeing any slowdown in his consumer. The consumers are building, and the economy looks pretty great from what he's seeing with them. Are you seeing the same? And do you have the same consumer as Affirm?
We definitely see that people are using our products, and I think U.S. is doing better than Europe. We have a lot of big business in Europe as well, obviously. I mean, we have almost 100 million users worldwide. So we see both markets, and it's clear that U.S. is doing better. But at the same point in time, we're also seeing this major shift away from credit cards towards buy now, pay later. So I think both for me and Max, some of that improvements are just because buy now, pay later is doing so well on behalf of other products.
But it's a younger demographic.
It's a partially younger demographic. We see about, our average age is about 34. So it's not like it's 18 years old. It's, bad. But it's definitely a generation that's, McKinsey did a survey in 2015. They called them self-aware avoiders. These were the audience, about 20% of Americans who are tired of the dirty tricks of the banks, of how they promote limits and so forth. And they want an alternative. They want fixed installments, transparent fees, easy to use.